Yeah, morning traders. Arguably the talk on Friday was about the equity moves that have been seeing, and it should spill over into a slightly stronger Asian market, although China's probably going to underperform a little bit. Yeah, this is coming on the back of a slightly stronger US dollar, certainly against the euro, the pound, and against the Japanese yen, and the fact that credit spreads didn't really do a lot. But yeah, the equity market continues to soldier on. Have a look at the Japanese market there, the Nikkei 225, in terms of the daily chart. It looks fantastic. Have a look at European equity markets. Everyone's asking whether we can see the 200-day moving average being tested. Yeah, that's in beast mode at the moment. You know, you've seen the IBEX up 9 consecutive days in a row in Spain. You know, we haven't seen that since September 2018, where it rallied for 10 days and then sort of drifted a bit lower. What I will say is, have a look at this intraday tape of the Nasdaq futures. You can't really ask for a lot more if you're bullish on these markets. Yeah, it started bottom left, finished at the top right. One thing I say is probably it would have been better to see higher volume in terms of SPOOs, 1.3 million contracts traded hand. Probably want to see 1.6, 1.7. Cash volumes were about 17% lighter than the 30-day average in terms of the S&P. But yeah, we saw 94% of stocks. So breadth was really good. You're seeing cyclicals crushing defensives at the moment. You're seeing high volatility, high beta names working well against low volatility. You've seen the data coming in strong. You've seen a high correlation between S&P futures and the Citigroup Economic Surprise Index. You've seen the excess reserves held on the liability side of the Fed's balance sheet moving up, and that's been a faster clip than what we've been seeing from the asset side. So the market's seeing that as quantitative easing. Better liquidity equals risk taking. We're seeing volatility lower. The VIX is trading sub 20%. Yeah, that's allowed volatility targeting funds into the market. We've seen CTAs closing a big short futures position in Russell, Nasdaq, S&P futures. And that's again moved the market higher. We're now at a much more flat structure in terms of that. So it's kind of make or break situation there. But talk is if they can go through 43.10, 43.20 in S&P futures, they'll start buying into the market, and that could propel us higher as well. And then of course we've got options dealers positions where they've been covering some of those delta hedges. So for me, this has been the flow show. This has really been about what's happening in flow. We're much more neutral position, but strength is breeding strength, and I think weakness will probably manifest into weakness. What is also happening is we're seeing good buying in high beta FX positions, carries working quite well to the Aussie and those factors as well. So a big week, we're watching those equity moves. Can it continue after that neutral position flushing through?